Hey everyone, welcome to the Dividend Reinvestment Plan, where we help everyday investors better understand the market through safe investing principles. In this segment, we're taking a closer look at some companies that have recently declared dividends on April the 19th. We're going to look at some financial metrics as well as point out some potential red flags. As always, make sure to do your own research. I'm not your financial advisor, so you are in charge of protecting your own portfolio. Hopefully some of this information helps you do that. Today, we're taking a look at 3 banking-related companies. We see some big discounts in all of them, and a lot of people are talking about banking because of the recent promises from the Fed that interest rates will continually increase. That might spell for increased profitability for banks, and with the discount, there might be some good opportunities there. So Citizens Bank, ticker CFG, announced a dividend of 39 cents a share. When paid quarterly, this comes out to about 3.5% of its total share price. Its current share price is at about a 23% discount from its 52-week high, and it's got a market cap of $22 billion. It's also got a price-to-book ratio of 0.88, a debt-to-equity of 0.33, and a positive return on assets, return on equity, and return on investment. If you go on FinViz, its gross margin, operating margin aren't available, but it's got a positive profit margin of 45%. Like I said before in my previous videos, I like to keep it simple. I don't like to nitpick the exact, percentages, but I want to make sure that everything's positive so that I know if I'm giving them money, that not only are they keeping money, but they're making more of it, and that with that, they're able to, return some value back to the shareholders. The 23% discount from its 52-week high appears to have an enticing buying opportunity, and its graph isn't like ugly. It doesn't look like it's like peaking or anything. And also the 3% dividend is pretty attractive, considering that the very safe high dividend yields from companies such as like Stag, LTC, they're right around this level too right now. So in terms of like surface level metrics, the dividend's not unattractive. The 52-week high is not unattractive. It's a $22 billion market cap company. So this is like a legit company that's going to be around. Its price to book is low, which is important because you want to make sure that the assets that you're buying, you're getting a good deal for them. Now, if you go into the cash flows, I think these are the best cash flows out of the companies that I put up today. Aside from the 0% growth in 2018, everything looks business as usual. Obviously, there's a big hit in 2020, but pretty much every bank during COVID took a decent big hit to its operating cash flow, so that's not too big of a deal. As you can see, everything else plus its net cash flow growth at the very bottom of the page is all positive. It's not worrisome. Next up, we got Hope Bancorp, and announced a dividend of 14 cents a share. It's paid quarterly, and it comes out to about 3.4% of the total share price. The total share price is at about 8% discount from its 52-week high, and its market cap is $1.9 billion, making this one of the smaller companies on this list. So the price to book is at 0.92, which again, for these banking companies without like the physical real estate and whatnot, it's primarily dealing with cash. And in tandem with its current discount, you're gonna find some that are below 1. The debt to equity is very low, 0.15. It's lower than Citizens Bank, so if you're very risk averse towards debt, this might be more enticing. It's got a positive return on assets, equity, and investment, and it's got a positive operating margin and a positive profit margin, so no red flags there. If you take a look into their cash flows though, you can see that they have spotty net operating cash flow in the years 2019 and in 2020. With that in mind, with the fact that it's a lower market cap, smaller company in general, I would say I would rather look into Citizens rather than Hope Bancorp. Last up, we got Flagstar Bancorp, which is a holding company for Flagstar Bank. They announced a dividend of 6 cents a share, which amounts to about 0.58% annually. Very low dividend. It's at a 27% discount from its 52-week high, which appears to have a pretty enticing buying opportunity. It's at a market cap of 2.23 billion, so it's larger than Hope Bancorp, but not as large as Citizens Financial. And it's got a price to book of 0.81, a debt to equity of 0.15, and a positive return assets equity investment, as well as a positive operating margin of 92% and positive profit margin of 65%. So no like glaring red flags right off the bat. Like the 27% discount from its 52-week highs looks pretty enticing. The dividend's really low, so that's not a red flag necessarily, but it's like, you know, as a dividend investor, I would like, you know, a better agreement between the company and its owners to return value. But so for some companies, it's good that they keep a lower dividend. But if you look into the cash flows, you'll see that they have bad cash flows. It's negative from 2017, 2019, and 2020. Just generally speaking, with the amount of other buying opportunities right now in the market, like a 20% discount is not rare right now, especially if you're looking at tech. There's a lot of very good buying opportunities there. And it's just that, you know, with all these different buying opportunities, it'd be questionable to park your money in a company with this many instances of negative cash flows. Like I said, those other metrics aren't that bad, but the dividend's not that crazy. You know, this buying opportunity is pretty much seen across the board. So I wouldn't say that you need to jump on this company. However, if I were to jump on any of the companies that I said today, it would probably be Citizens Financial Group. It's got a chunky discount of 23%, and its dividend's not bad. The rest of the metrics, there's no big red flags. So, and in comparison to the others on this list, it's probably got the best cash flows year over year. So thank you for watching. Follow us on Instagram at drip.invest or support the channel and learn more at www.patreon.com/dripinvest.